We start with the high cost of living crisis in Canada and some positive signs today. Inflation slowing down to 2.5% in July. That's the slowest pace in more than 3 years. It means some of the high prices we have been dealing with for years may start to fall. And now another interest rate cut by the Bank of Canada next month is even more likely. CTV's Annie Bergeron-Oliver is in Ottawa covering our top story for us today. And Annie, what's the big takeaway here? What can you tell us?
Todd, prices are still increasing, but the rate at which that is happening has slowed dramatically to just 2.5% last month.
Across the board, inflation is coming down, putting slightly less pressure on cash-strapped consumers.
Less goods and services that consumers are purchasing these days are facing high inflation, and that's a really good sign for Canadian households.
Last month, inflation was down to 2.5%, the lowest since March 2021. The drop driven by a 2.8% annual decline in the cost of travel tours and a 1.4% drop in the cost of passenger vehicles.
Prices are stabilizing and starting to come down a touch. So really, I think we're still seeing some of the pandemic effects coming through. But overall, I mean, generally still on the services side, very positive.
But the sticker price of many goods isn't actually dropping. Rent, food prices, and shelter costs are still increasing, just at a slower rate than before.
Either it's up a little bit or it's stabilized, but I haven't seen not too much go down.
Like many Canadians, Tasso Vasilis hasn't seen any relief despite inflation coming down. What he has seen is regular customers with less disposable income choosing to come in less often.
We're high volume, and where we had people coming in maybe 3-4 times a week to the establishment, they come in maybe 1 or 2.
But economists say these are all signs the economy is slowing, and that is likely to mean more interest rate cuts from the Bank of Canada.
For now, it's encouraging evidence. It keeps the Bank of Canada on track with the conviction necessary to cut again by a quarter point in September. We have at least 1 or 2 more cuts coming thereafter toward the end of this year.
The key interest rate currently sits at 4.5%. The Bank of Canada will make its next interest rate decision on September 4th, and economists predict, Todd, a 25 basis point cut.
Annie Bergeron-Oliver in Ottawa. Thanks, Annie.